Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Well, today being Wednesday, March 26, 2008, we're going to discuss a few odds and ends. We're going to go obviously over the intraday charts to look at the pattern, time, and price action in the markets today on the E-mini futures contract. And then we're going to focus in on the Nasdaq, the SPY, which gives us a good view of the S&P on the daily, and just look at what's going on in this market, because basically what we had talked about over the last few videos, and obviously you guys can go back and watch them for yourselves, but we've noticed how the big move up was a change in near-term trend. And when you have a change in a near-term trend, you watch for the next setup in the candles, and we're looking at candlestick charts here, to set you up for the next rally. And we talked about how yesterday we were going to have a pause day, and this was talked about in the prior video to yesterday. So after Monday's mega rally, on the heels of Thursday's mega rally, we talked about how you needed a pause day, which we got yesterday, a beautiful pause day. And then we even mentioned yesterday how we really do want to see a little bit of a pullback in this market to set it up for a healthy next move up. And we did see that today. The Nasdaq ending down about 16 to 17 points, the Dow down about 110, and the S&P down about 12 points. Now, a lot of people might say, well, a 100-point drop on the Dow, is that considered consolidation? And it's all in proportion. Everything is mathematical in the markets, whether it's a move in a stock, a retracement in a stock, or an index, or any type of commodity out there. It's all mathematical, and there's ways to calculate all this stuff mathematically. And that's what we specialize in TheMoneyStocks.com. It's some of our proprietary analysis as well as the technical side of things. But needless to say, what you're going to look for is when you have a move on the Dow, for instance, 500, 600, 700 points over the last week or whatever it was up, you have to expect a retrace, whether it's a Fibonacci number or not, 50% retrace or even less. In this case, it may be less. Well, you have to expect that. And that's what you're seeing here. So if you have a market that goes up 500 points like the Dow, to pull back 100, 110, even 200 points is not out of the realm of unhealthiness. Now, should we get a major move down of 300, 400 points, then you can possibly cancel out the positive move in the markets and you set up for another possible move down or consolidation and then a move down to the downside. So it's all mathematically done where things, if you hit a certain point, you cancel out certain things and you look for new moves, and it's all based on chart patterns and this proprietary stuff that we do. So I do encourage everyone to come join the chat room, come join the swing trade alerts and the options alerts on the website InTheMoneyStocks.com, and start finding out some of these key technicals that we use. Now let's get into this market, because for the most part today was a very boring day when it comes to market moves. There wasn't a lot of zigzags, there weren't huge moves. On the intraday chart, just like yesterday, it looks bigger than it is. This is really nothing to write home about, if I may. Except for this one move late in the day, which was a nice buy program that came in, which spiked the market all the way up to the 200 moving average right here. Now, we thought, well, maybe there's news leaked or maybe something's going on, because it was a very big buy program on decent volume there. But when it all came down to it, it turned out to be nothing. You had a buy program. It could have been short covering. There's a lot of reasons out there. Could have been an institution loading up here for the next move up. We're not really sure. It's all speculation on our part at this point. But you did see here basically follow through to the downside, and then you had a little bounce back and then another sell. And I'm going to go over that here, but you can see the basic trend today was down. You can just draw basically from here around 6:30 in the morning, 6:30 a.m. Eastern time in New York here, and you could just draw the line right in between all these candles, and you had variance here on the spike, but it just retraced right away and moved to the downside. And you did see that spike up, and look what happened. It hit right to 200. It couldn't get through the 200. You had right away a sell candle. It paused right on the 20 moving average, got a little bit of a bounce there, and then another retrace down. Now, late in the day, this is interesting, because the last two candles here, the big red two candles, you're actually looking at 4 o'clock to 4:15 when the futures still trade, but the market's closed. Now, what happened there? Because that's obviously, as for after-hours activity, that's a pretty steep spike down. And what happened was Oracle reported earnings, and it was not too pretty. So I'm going to bring in the level 2 here on ORCL, which is the stock symbol for Oracle. And you can see that Oracle closed here at $20.94, down 14 cents, and is trading down to $19.50. So you are trading down about $1.50 on Oracle after hours on earnings, and that's not a great thing. Now, the question remains is, what do we see for this affecting? This is going to affect technology at the open tomorrow, no doubt about that. It doesn't look like it's going to have a major impact. You have the futures here trading again when they reopen at 4:30. They close at 4:15, futures reopen at 4:30. You have them up actually half a point. But remember, you have this whole after hours selling right here that is going to have to be factored in tomorrow. So you might look at a slightly lower open as of now. Now, that doesn't mean that we couldn't have news overnight or something go on where that could change dramatically. So I just want to keep that in perspective, is that as of now, if you were to look at it, it's looking like a little bit of a down move. But the one thing I want to bring to point here, and we're going to get into the daily chart shortly, is that that's okay. We want to see more consolidation here. I think that we have another day, and from our analysis, we have a possible one or two more days of consolidation before another move up. So whether or not it happens, do we consolidate tomorrow, pull back again? Do we see another down day on the Nasdaq of 20 to 30 points, which would be healthy again, because the Nasdaq ran about 150 points or so. So you want to see a retrace of about 50 points of that at least before it sets up for the next move up. Or do we have just one day of that or 2 days, and do we, which is the next move? When does the next move come to fruition? It does still look like it's setting up beautifully for that. So let's look at the SPY and show you that. All right, we're going to switch to the daily chart now. And you can see how beautiful this is. Look at the massive move here. And then look, we're hovering right on the 50, right above the 20. And we've started to just make this gentle pattern to the side, to the down. And that's what you want to see again. You see how, look at the angles here. If you were to draw a right angle here, so you draw a straight line here, and you take this angle here, this is a very steep angle. Then the consolidation angle, and you would draw another right angle here, needs to be less. It needs to be a lesser angle. You don't want to have a steep spike down because that negates the move up. And again, everything about the markets is mathematical, and I keep on saying that, and that's what we specialize again at InTheMoneyStocks.com, is dealing with this stuff. We take out all that Wall Street junk, all the hype from the media, take that out, throw it out. We don't want to know about it. Even news, the charts will tell you ahead of time what's going to happen. It's just the news causes the reaction that the charts are telling you will happen. So as long as you learn how to analyze these charts and so forth, you'll be fine. Now, we are seeing that continue. I think we do want to see a little more consolidation, meaning a sideways to down move again in the markets. Whether or not it happens halfway through the day tomorrow, it looks like it's going to continue tomorrow with Oracle causing a little pressure, especially on tech land tomorrow. The question will be, does it last all day, or do we rally in the late afternoon, or do we have another day, full day, and then possibly even another Friday sideways to down move again? All right. But as of now, this is setting up perfectly for what we think is going to be another move up in the charts, and I think you guys can see that. Now, one thing I do want to point out is you had a nice little W pattern here and WV pattern. Could this be the V pattern forming? That would be wonderful. That's setting up for a power move up. And again, it's hovering right around this 20 moving average. You want to see this market. It could tick below, but you really don't want to see it establish itself below the 20 for very long, because then these two moving averages above become resistance again. So we'll continue to update you guys with that every day as we analyze it and find out where these moving averages are going, where the technicals, where the angles are shifting to, where the mathematical proprietary formulas that we've developed are showing us where this market is going. Again, I definitely welcome you all in the chat room. It's a great experience. We do e-minis and day trading, and just it's a live one-on-one pretty much session where we just talk and analyze the markets minute by minute. It's a great situation for those of you guys that sit at home and kind of want to learn about the markets as well, because we talk about all this technical stuff and you get a good grasp. All right, we also do the institutional consulting, but for most of you guys out there, that probably doesn't involve you guys. But we do the private consulting, which is fun as well. You get a one-on-one session with the chief market strategists. Okay, so now just looking over the Nasdaq, let's take a look at the Nasdaq, and as we did mention, it's going to be under pressure tomorrow, at least at the open from Oracle, and you can see the continued consolidation. I mean, this is a beautiful chart setup. You had the powerful move of basically 100 points to 150 points on the Nasdaq from the low here, which was, let's see, around 2160 or so, from the low there, all the way to the high here of 2340. So it's almost 200 points. It's about 180 points there. And then you're seeing this sideways to slightly down pattern. Now, I think we really do want to test the 20 moving average here, and I'm just extending it to you guys so you guys can see it. This level right here, really you do want to come down and touch this level. I think that would be healthy. And then we can look for that blast-off effect up in a possible another rally. Now, again, even though we talk about this coming rally, realize that the charts are always changing. Every day we get a close, it's one more piece to the puzzle. Every day we get a close or a move in the markets, it can negate or enforce what we're talking about here. So tomorrow, if Oracle really has a rough hit on the markets tomorrow, we have to reanalyze the markets and see, has the outlook changed? Do now we see more downside? Do now we see more upside coming? When is that going to come? It's just one more piece of the puzzle that can change the whole overall view. So I just want to make sure everyone understands that, is that it's just putting pieces together. Everyone can do it. Just takes a little studying and learning, and we are willing to teach anyone willing to learn. All right, guys. So now let's talk about some stocks in play today. We've had a great time in the chat room with a couple of the overnight swing trades. We do the riskier swing trades in the chat room, not in the swing trade alerts, because you got to manage those positions intraday. They're very, they're the smaller caps. We do a lot of the smaller caps, mid caps. But we did the Z-View a couple days ago, closed it out yesterday for 30% gain. We were in that at 0.70, so 70 cents, exited at 91 cents. Just a great move on a small cap there. The NURO, take a look at this one, and look at the chart here. This is an oversold chart. Now, it looks like it wants to hit the 20 moving average tomorrow, and it may well do that. Some people sold out today, so I have to give you guys the disclosure that some people are still in that in the chat room, and it's very important to realize that. So I am talking about it while some people are still in it, looking for a little more upside in that. Ultimately, it has a possibility to bounce huge. I mean, who knows if it'll happen, but it is a possibility. So keep an eye on NURO, and that's about it for today, guys. We'll have a wonderful evening. We'll talk to you tomorrow. We'll reanalyze the charts for you. Call us if you have any questions. Take care.